So what if I told you it was possible to know exactly when to sell your stock to lock in profits before it has a major 30 to 50% crash? And then once you lock in that profit, say you were long on this stock, CEI an example, once you lock in the profit, what if I told you you can trade it both ways and not only sell your, bullish position, your call position, your shares, but to also play put options or to short the stock if you're using the right broker that has the shares to short, and you would time it nearly perfect and short the stock literally towards the high of days. What if I told you both of those things were possible? Well, within this video, I'm going to show you exactly how we knew how to sell, how to short, how to buy put options on CEI stock when this was in the 175s, nearly towards the top today, towards the high of day. And I'm really going to walk you through this trading strategy. This one simple confirmation, this one simple pattern recognition that I'm about to show you is game changing. So make sure you stay to the end of this video. So in terms of CEI stock, within Trader Society, this was the best trade live on stream today. I had 4 trades in total. One is still open. I'm currently at 5% on the PROG position. I had a 12% win on SPY puts very, very quickly. Didn't even have time to alert that one because it's so quickly. And then CEI, this was a 30 to 40% win. I absolutely killed it on CEI. Sold too soon, but it is what it is. My target reached and I played it safe and I got out. With that being said, at 9:55 a.m., I decided to buy put options on CEI stock. We're also going to be talking about some options trading tips when you're trading small cap stocks because they trade differently than stocks and they require a lot more patience. So we're going to be going over this. And you can see I ended up adding to my puts, averaging my cost down. I added at 28 cents. I added at 26 cents. I added at 21 cents. I added at 25 cents, 20 cents, 19 cents. And then all my sells were above 30 cents from there. My average, I got it down to 23 cents from 32 cents. I was adding heavy when it dropped to like 19 cents. I'm like, man, this is a gift. And this was all within the live trading stream. And I averaged out to be 30, 40%. We had students within Trader Society play the put options on CEI. Like the results have been absolutely insane. I saw one guy, I think he made like 140%. Yeah, Discord has been glitching all day. It's not even loading, but Lighthouse, I think he's up over 140% on SPY puts. So many people killed it today. I mean, 162% return on the CEI puts, CEI puts. These guys were all crushing it on CEI. My guy, again, he made over $7,000 today, consistently killed it. So with that being said, how were we able to do this? How were we able to get in towards the top? Why was I expecting a big pullback to about $1.40? That was my target. And I told people, be patient and this will most likely end up being a swing trade. It ended up hitting that crazy swing trade move, earlier than expected. This went all the way to $1. In terms of swing trading, I could definitely see it drop to $1. Wasn't expecting that today, though. I was expecting $1.40. So very simple. This is called a gap close reversal to fill the gap below strategy. And you could use it the inverse. You can use it. Right now, I'm using the same strategy on PROG. Watch my previous video, it goes over that. PROG stock, it has a gap to fill below right here at $1.08. It fills the gap. It shows signs of a reversal. It trends up. The volume comes in, the bullish candle comes in, and then it tends to go up. You can day trade it or you can swing trade it. Swing trade it, it's got to have a bullish candle at the lows towards support. Now, in terms of CEI, the reason why is very simple. This is a resistance level, right here at $1.92. $2 is a keyhole round number. It's been proven multiple times if you study the past of this stock. It loves to crash quickly, very, very quick when it tops out at a keyhole round number. Like $2 a share would be a key number. Also, there was a gap to fill right here. There's a gap to fill at $1.81. So the point is, if CEI fills this gap at $1.81, if BBBY fills this gap right here at $28, then what you're going to see start to happen is if it reacts as a resistance level, see how there was a gap here at 28.30. This is where I bought the puts on triple BY yesterday using the same strategy I used on CEI to make 30-40% return. If you see it pull back and react as a resistance level, you're going to want to short the stock. You're going to want to sell. You're going to want to buy the put options. For example, you can visually see as soon as BBBY turned that key $28 gap fill level into a resistance level and started pulling back, it sold off very, very hard for the day. And it's no surprise that CEI did the same exact thing. There was a gap to fill at 181, and you could see it had a little breakout, but once it turned it into a resistance level, which was right around here, it turned it into resistance. It turned it into resistance. It started pulling back, right? Initially, I was up about 15%, but then it started to squeeze back. And the crazy thing is, I bought these puts, right here when this was trading at 173 at 9:55 a.m. I bought these puts. It only went to 180, and I was down like 30% at the peak. What I've noticed is with small caps, if you get a move in your favor, see how the move was in my favor and I was up, and then it went against me, but not that much. If you get that crazy move within your favor, this is what I noticed with the small cap stocks and the put options. The theta decay and the implied volatility, you see how the implied volatility is insanely high. That's going to hurt the contracts. So what you need is you need the big move. So just know whenever I'm trading a small cap stock, I'm going to be more patient and I'm going to be playing for a big move. And if I still like it, I'm going to be averaging my cost heavily, averaging my cost to get my average ideal. I started buying these at 32 cents. They fell all the way to 15 cents. And I started adding very heavily in the 19 cents, 22 cents, 23 cents. I got my average down to 23 cents. And then as soon as, after Biden was done speaking, and also once 180s was still reacting as resistance, and as soon as 168 cracked again, these took off. These contracts went all the way to 55 cents. If you were to go even further out of the money, I don't like going too far out of the money. That's another thing. You're trading these small caps, you're going far out of the money. For them to really print, they need to become in the money. With that being said, I was studying it. I was saying this is just it's having a massive gap up, and I'm looking at the chart. I'm looking at this pattern. This is called pattern recognition. See how for 3 days it basically just ramps up 1, 2, 3, and then when it hits the twos, it's just done. It sells off hard. You can see again like 1, 2, 3, like 3 big days. Even the same pattern, 1, 2, 3, 3 big days. We're talking about a move from 55 cents to $2 a share within 3 days. So if this is just sitting here in the 180s, forming resistance, breaking down, faking out, all day, it's just sitting here. It's sitting in between this channel of like 155 to 180, 155 to 180. The point being is, if it can't go above 180 and turn that into support, if it can't go above $2, this stock is just going to snap. You got to be patient though. That's the key. You got to be patient. Remember, when I trade options on a small cap stock, I'm not looking to get in and get out very quickly. That's not what I'm looking to do. I'm not trying to scalp it very quickly. I'm trying to wait for the bigger side of the move. And I felt the big move was going to be at $1.40. That's why as soon as this hit, 145 to 140, I started closing out my position. But it ended up being an even bigger move. This was more of like a swing trading target at $1.03. But the point being is, you just got to understand it's extremely overbought. And, if you looked at the candlestick was extremely bearish when this was trading in the 168 range. It consistently turned the gap close reversal level into resistance. So as long as it stays below that gap close reversal level, it's going to try to break down below this channel. Once 155 cracks, your next support, you could say there's support at 140s. That's what I was looking at. But the main thing is your next support is at 130s. There's a gap to fill below at 130s. And if this 155 cracks, that gap is basically going to fill. If the gap fill reacts as support, it's going to climb back up to 155, which is why I chose to get out. If it cracks and reacts as a resistance, then you could see, if you look at the 5-day chart, your next floor is towards $1.10. If $1.30 cracks, your next floor is right here towards $1.10. So the chart is going to tell you. But guys, that was the play. So in terms of like patterns and stuff like that, you have the gap close reversal right here at $1.80. If that reacts as a resistance level, I'm going to look to short. I'm going to look to buy puts. Once I identified that, I played the right side of the trend, right? So that's where you know to sell. Also, it had a massive move up already. Within the past 2 weeks, it went from like 47 cents to $2, right? So it already like 4x. Then you have within the past 3 days, a massive move up from 60 cents to $2. So it's extremely overbought and it's due for downside potential, and it's got multiple gaps to fill below. CEI stock loves losing its gains. CEI stock loves filling the gaps below. It also likes to fill the gaps above over time as well. But with that being said, it's just once you see that resistance come in at that key level, you got to short, you got to sell, you got to play the put, you got to flip sides. And that's exactly what we ended up doing with this situation on CEI. So in a nutshell, those are going to be some of the basics for the gap close reversal strategy. It's the same exact thing we used yesterday to kill it on triple BY. Triple BY had the massive gap up, CEI had the massive gap up. Once we see that triple BY fills the gap right here, there's a gap fill level right here. If it reacts as a resistance at 28.30s, then we buy the put options, play for the gap to fill below. You can also see BBBY recently had a massive gap up and it closed directly weak at the lows. And then what happened? Like I told you guys in yesterday's video, it's most likely going to spike. That's why I'm not swing trading, because history shows it likes to spike back up a little bit before going lower. So I have to wait for more bearish confirmations to consider get back in. And then boom, there's the spike. We locked in profits yesterday. So with that being said, that will improve your trading drastically. If you just do that, this is literally all I've been doing. Like on the SPY, on CEI, all I've been doing is just getting in when these gaps fill at their key overbought levels. So like in terms of overbought gap fill levels, right here, this is your overbought gap fill level at 180, key whole rounded number towards $2, big downside potential. They go down just as fast as they go up. You saw what happened here. A lot of firms, a lot of short sellers like to target these pumps as well. And there's also a gap to fill here at 380. That's again, best level. You know, anything can happen within history. Those are like the best levels. We wait for those gaps to fill. When we see that they have these massive moves up in a short period of time, and then they turn those gap fill levels into resistance, they start to reverse and they start to fill the gap below, So we'll look to see, this is why for those of you who stay to the end of the video, you get a little bonus. From here, if you're interested in buying, let's see how it reacts right here towards 78 cents. The quicker this gap fills, the better the buy it's going to be. You want to stay in when the volatility is hot. You want to get in when the volatility is hot. So if it has a quick move to 78 cents, I'm not going to be playing puts from here. I already killed it on puts. I'm not going to be doing anything from here. Most likely going to be chop and then see some downside, some spikes, some downside. But I'm hoping that we can get a quick move to 78 cents. If so, it's got to be quick. If we see some bullish confirmations come in, if this previous resistance reacts as support, CEI should pump back to above $1. So I'm looking to buy some calls. I'm looking to buy some shares at 80 cents with a very tight stop, because if it cracks 80 cents, you're looking at a nice pullback to 60 cents. And I ain't holding for no big loss. So with that being said, my level of interest for buying for a nice micro trade to swing trade, it has to close strong green bullish candlestick at the end of the day. So you don't know if it's going to be a swing trade till the end of the day. So in the meantime, it's just a day trade. You lock in profits. Then you can always add or get back in for the swing trade. But with that being said, my level of interest at 78 cents is to buy. That's my level of interest. So if I see it reacting bullish, it's holding up at 78 cents, but it needs to quickly get to 78 cents. Then I'm planning to, buy calls. Then I'm planning to buy shares, right? And kind of ride this back up. So what I'm hoping for is that we get a gap down, because if we get a gap down, it makes the strategy better. Say this gap's down, then it's going to start to fill this gap at 78 cents. And then we can see a reversal at 78 cents, shoots back up to fill the gap above, right? So right now it closed at $1.24. Hopefully this can gap down. If so, it makes the strategy better because it's an overreaction. This was just at $2. If this gaps down and we can quickly go to like 80 cents, that's an overreaction. So we're most likely going to see buyers show up to turn that previous resistance right here at 80 cents into support, because we recently had a massive pump. So that's going to be the play that I'm looking for in CEI moving forward. That's the only thing I'm interested in doing. So like I said, ideally, you want it to gap down. It makes it better when you have a gap close reversal to then fill the gap above. That's what makes it better, when there's a gap to fill in your favor. If it's just a gap close reversal, it's good, but it's not as good because there's no gap to fill in your favor. So in terms of like best, most amazing setup, if this gaps down from 124 and we can get a quick gap fill within a few days to 78 cents, if you see 78 cents react as support, it's going to be a buy with a stop at like 70 cents. That's my thoughts. That's my analysis. If 78 bottoms out, then we could see a push to above $1. So that's the only thing I'm interested in doing. That's what I do. I trade the best setups at the best prices. So that means short selling at the high gap fill, buying puts, and then going long, buying the dip at the lowest gap fill, which is currently sitting at 78 cents. Everything else in between, fuck it. That's what I say, man. Forget in between. Trade the best setups at the best prices. Guys, I'm telling you, my results this past month, my account is nearly tripled. The results that I'm getting are insane. The win rate is absolutely insane. The entries is absolutely insane. The timing is absolutely insane. Only thing that's been off in terms of this week is exits. We've been seeing some very, very big moves in my favor, but I sold way too soon. But you know what? I'm playing with a very large account, and I'm quickly making like 20, 30, 40% return on the contracts, which can cause my account to go up like 2, 3, 4%. You compound that, just pull out a compound interest calculator. You'll see exactly what I'm talking about. If you're pulling a daily 2 to 3% return on your account, trading these options, and like I'm not putting in my entire account. That's the thing. Like I'm letting the contracts do the work for me. Like we're talking 20 to 40% returns very quickly, like within 30 minutes, within an hour. And I'm typically only trading at market open. That's where I trade best. I trade best towards market open. When I do trade small cap stocks, those trade differently. So remember, when you're trading small cap stocks, the implied volatility is typically going to be high when we trade them, especially if it's a massive gap up or a massive gap down. So keep that in mind. The timing has to be perfect. If the timing's not perfect, for example, like I remember these contracts. This is the crazy part. So like I bought these puts at $1.75. They were up 15% when it quickly crashed to $1.54. It went slightly. So basically right where I bought the puts, I was down like 15%. And then when it pushed higher, I was down like 30%. But then I started adding in, got an amazing average. So the point being is like the contracts can be worth less as you hold them, especially if they're out of the money. The theta decay and the implied volatility is really going to hurt the contracts. So it's not only you, it's basically you have to be right about the big move. That's what it comes down to. You have to be right about the big move. This is either going to break out and rip above 2 and then shoot up to 240, or this is going to crack 150 and get absolutely crushed. And you have to put yourself in a situation where you're playing for the big move. When you trade options on small cap stocks, you have to be playing for the big move. You can't just be scalping, getting in, getting out. If you do that, you have to like time it perfectly. The timing has to be perfect. Like the point I'm trying to make is like, if you bought puts right here at $1.80, right? Say you buy puts right here at $1.80. It pulls back, then it goes back to $1.80. Those puts that you bought at $1.80 are going to be worth less when it goes back to $1.80. That's just how it works with small cap stocks. I've noticed it all the time. That's why you need to be playing for a big move. A big move is 140. A crazy move is $1.05. I was thinking like tomorrow it really gets crushed, but it ended up having a big move, very big move today. Sometimes it happens earlier than expected. Point being is, I put myself in a position where I can get a big move and I average down. Just know when you're trading the small caps, just understand like you be patient. I trade those a lot differently. I'm very patient. I try to be a lot more patient with the small cap stocks. You guys see me trade SPY and stuff like that. I'm typically in, typically out. When I'm trading a small cap and I'm buying options on a small cap, that's where I'm a lot more patient. And you'll see it all the time where it goes back to my initial entry and we're suddenly down like 5-10% on the position, or it goes slightly above my entry and then we're down 20% plus, whatever it is. I will average into that. As long as the key level that I'm looking at, and the key level was $1.81, you can see like previous support still reacting as resistance, still reacting as resistance, gap level still reacting as resistance. As long as that key level is still reacting as a resistance, I'm going to start to average my cost in, because I'm looking at it as like a gift, because like I'm playing for this move to $1.40. I'm playing for this crash, and the chart is telling me like this is still so bearish, but the contracts are so much less. Like I was buying these at 32 cents. Now they're at 20 cents and this still looks bearish and it hasn't gone far away from my entry. It's like, what a fucking gift to buy more. So that's what I was doing. That's why I kept adding, because I understood that the more bearish it looks like, and if the contracts are going to be lower and it's towards my initial entry or above it, I'm just going to be adding into that, because that's just making me more confident that, wow, I'm getting an even better deal on this big move that I'm looking for. So just understand that with the small cap stocks, I trade them differently and the contracts trade a lot differently as well. So don't go super heavy on size with them, because if that big move works against you, it can be a quick 50% loss. That's just the reality of the situation. So don't size in as big on the small caps. Only enter in big move situations. Don't try to get in and get out, and be more patient with them. So, right, you're going to see me trading small caps at their best levels possible. Like, let me ask you, like in terms of CEI, right? I'm not trading it at any of these levels. I'm trading it when it hits the best level. That's where I'm buying puts. And then that's it. Rinse and repeat. In terms of calls, I'm interested right here. Rinse and repeat. That's like 2 trades in a couple single months on one single stock. Same thing like I did with PROG. PROG, where am I buying it? When it hits 108 and bounces. I'm buying into that bounce off of 108. Best price possible to buy it. You see what I'm saying? You do this rinse and repeat. Give yourself some time and you compound that account, your results are going to be exponential. I'm telling you, your results will be exponential. At first, in terms of like compounding your account, especially if it's small, as long as you're doing what I'm saying, you're getting out, you lock in your profits and then you cut your losses quickly, but you're getting in, you're timing it well, you're getting the key entries. At first, the graph is going to look like this. And then all of a sudden, you're going to see as time goes on, and then once you get there, you're like, wow, it's a good thing that I decided to do what's best and not go all in on these option contracts, not go YOLOing my money, not go trading all over the place, but just sticking to the best key levels, the best prices at the best setups, locking in profits along the way, cutting losses quickly. I'm telling you, if you do this, it's going to start off slow, but then you'll see it starts to gradually go up. And then at one point, it just goes like that. And then once it goes like that, you're like, wow, I made it to the next level without YOLOing my money, without going all in, without aiming for the big win. I was taking the profits at the key levels. When one of my targets hit, you're typically going to have like 2 or 3 price targets. When the first target hits and it looks bearish, I was locking in my profits on the calls, right? And then you might leave a little bit on, aim for the bigger win, like whatever you want to do. But I'm telling you, my results have improved immensely once I stopped aiming for the big win. As of this week, though, this is now the second day in a row where the fucking big win opportunities just hit. They weren't hitting for like the past 3 weeks. So if I would have aimed for the big win the past 3 weeks, I would have gave it all back. So it's not an exact science, but you can always leave on like 20, 30% for the bigger win. At the end of the day, it's support, it's resistance. The price action is going to tell you what's going to happen. Like if you're aiming for, it's just the price action. The chart is going to show you what's going to happen. You guys know what I'm saying, right? But I mean, that's the point that I really wanted to make, guys. I will see you in the next video. The next video is really going to go over the in-depth price action analysis for the stock market, for the SPY, and for a couple of trading plans that I'm planning to enter. If you do want to be a part of Trader Society, it's going to be that first link down below in the description. I will see you guys within the next video.